Hi everyone, in this video we do the fundamental analysis of a stock. Usually the fundamental analysis will be done with the help of the financial documents issued by the company, and one more thing is the financial statements are in the raw data. What we do in this video is we convert the raw data into some kind of interactive application that contains bar charts and column charts, so that we can easily capture the information and we can do our analysis easily and efficiently. And one more thing is, because it is an interactive application, switching from one stock to another stock is also easy, so we can do our financial fundamental analysis in a short period of time. Welcome to my video. Let us go together in analyzing the stock called ACC stock. This is the interactive application I am talking about. It contains the bar chart. In some other pages it contains column charts also. At the top of the charts we have a filter where we can select the stock we are interested in analyzing. Now we are going to analyze the ACC stock. The first thing is we are analyzing the balance sheet. The balance sheet is the snapshot that denotes that shows the health of the company at a point of time. If it is at an year, it is a year-wise chart. We can also see the trend of the parameters of balance sheet in the year-wise. So the years are 2012 to 2022. The first parameter we see is the share capital. The share capital is the money collected from through the equities and the preferred common stocks and preferred stocks. It seems that ACC doesn't go for any public offering all these years. They have all these 11 years they haven't gone for any public offer. It is maintained at the 188 crores itself. The next one, the parameter we are seeing is reserve. Reserve is for keeping the money aside from the profit to do some kind of obligation, to do for some future obligations like paying debts or obtaining some assets. All those things for which the reserves are made from the profit. The reserve is in the increasing trend. When you see that in the reserve is in increasing trend, in 2021 it is 12,511 crores, and in 2022 it is 14,121. So within a year it seems that around 2,500 crores have been increased in the reserve area. So what we understand is AC is keen on spending money for their future obligations. The next one is the borrowings, the loans. It is the debt what the company is getting. Initially the ACC have got a great amount of debt, for example in 2011 and 2012. Then it has reduced in 2013-14 likewise. However, now it has become 126 crores. But when we compared with share capital, it is 2/3 of the share capital. So the loan amount got from by the ACC is somewhat less. The other liabilities, if we cannot give each line item for any liability, and it is bundled together and said it is other liabilities. We don't have any information about whether it is current other liabilities or long term other liabilities. We have that kind of details, then we can do our analysis in detail. Now it also shows that the other liabilities in a increasing trend. The next one is the total liability, or it can also be seen as the total assets. In balance sheet, and the total liabilities and the total assets are balanced, that is both are equal. So it shows in the growth of the company. The growth of the company is also in the increasing trend. That seems to be very good. So that is we can be sure that in the growth of the company is in the increasing, in the positive trend. The next one is the fixed assets, that is the equipments, buildings, and the not movable assets. All those are called fixed assets. That is also in the increasing trend. The next parameter is CWIP, that is capital work in progress. That is the amount paid for constructing the building and maintaining the assembling the equipment. Likewise, what it means is CWIP means is we get paid the money, but the work is in progress, it is not completed. So it shows such the ACC also invests a huge amount, that is 1245 crores in CWIP. So they are building some kind of they are constructing some kind of buildings, are doing some foundation for their future. The next one is investment by years. The investments is the ACC invests in other companies in the form of stocks, bonds, or real estate holding, all those things. Initially, ACC has invested a lot of amount in other companies, but now it has reduced. At present, it is 150 crores in the year of 2022. Other assets like other liabilities, the assets which are not having a significant value, they are bundled together and they will be formed as other assets, and we don't have any information about the current assets or long-term assets. We get more information, we can do the analysis in detail. We have already seen the total liabilities. Now the total assets and the total liabilities are balanced in balance sheet, and that shows the growth. Next we can move to the income statement. In the income statements, the parameters are total income, total expenses, net profit, revenue, expenses, net income versus revenue, EPS. Here the total income, actually we have got 2021. Yes, the 2022 data is not available when the application is developed there. So when we see the 2020 and 2021, the income has been increased by really a very good amount. In 2020 it is 13.8 crores. In 2021 it is 16.3 crores. It is really good. We don't have the data for 2022 in this chart. However, in the the quarterly result, we can analyze in detail in 2022 data also. Likewise, the total expenses also increased from 2020 to 2021, but the rate of increase is not that much like total income. So anyhow, in another one application, we will see the rate of change, where we can easily compare what is the rate of change of expense and what is the rate of change of total income. The next one is the net profit by years. In 2022 we don't have any data. It is also increasing trend. In 2020 it is 1430 crores. In 2021 it is 1863 crores. It is really in a increasing trend. The next parameter, the next metric we see is revenue. Revenue is really good. It is dipped in the 2020. However, it is resumed in 2021 to 16,152. And expenses like revenue, it is also, the both are seem to be in the same trend, however in a different figure. So the expenses are also increasing like revenue, or it is decreasing if the revenue decreases. That is the way it is being done. The next one is an important ratio called the net income and the revenue. It shows the management ability to control the expenses and increase the income. It shows that in 2021 the ratio is 12. That means they are able to control the expenses and increase the income. The next one is EPS by year. The EPS is also very good. In 2020 it is 76 and in 2021 it is 99. So a great leap. So the earning per share is very good for ACC share. Anyhow, we are going to analyze in detail for 2022 in the quarterly results for this all this income statement or the profit loss statements parameters. The next one is we are moving to cash flow. Cash flow, we know that the company shows how much cash is coming into the company and the company how much cash is going out of the company. It is the actual cash. In balance sheet and income statement, we are only recording the account receivable, account payable, that is the cash is not materialized, but in cash flow it is the actual cash that is coming into the company and the actual cash that is going out of the company. The cash from operation by years. The cash from operation is the cash coming from the customers and the bills paid to the paying to the suppliers, tax paying to the government and the salary to the workers. All those are counted into the cash from operation by years. It is positive and it is also in a increasing trend. In 2022 it is 2835. And the next parameter is the cash from investing by years. Investing is the company is investing in themselves, that is they are building the or they are constructing any additional building or buying any equipment or doing any other future obligation investment for their future. That is shown in the the cash from investing, that is in the negative form. That means the amount is going out of the company. It is also good because the ACC is considering for their future investment. The next one is the cash from financing activities. It seems that it is also in the negative net trend. That means the financing is injecting into the company. They are getting some kind of finance from debt or some borrowing or something like that. So it is minus 331, minus 321, and they are paying the dividends. That is also coming into the cash flow from financing activities. So it is in the negative trend. The next one is a net cash flow by years. It is good. In 2022 it is 1517. It is a net cash flow after doing all the cash from operations, cash from investing and the cash from financing. The next one is the ratio. It is cash from operations versus net income. It shows that in 2022, in 2021 it is 119 percentage, and it is actually what they say is the net income and the cash from operations should be at least equal to net income. It is 119 percentage, that is it is 0.19 percentage more than the net income. That is good. So it shows that the management is able to keep the cash from operations good enough to do their operations. And the next one is the cash from operations versus revenue. It is also an important ratio. It shows that how much paisa would be made with the help of selling a product. That is how much paisa will be made with the selling of 1 rupee. In 2021 it is 14 percentage. So 14 the ratio is 14 paisa. That is in 2014 21 it is 14. That means the company is able to make 14 paisa out of 1 rupee sale. That is somewhat good. And then we can move to the quarterly results. In the quarterly results we see quarter wise income parameters, profit loss parameters. Let us see the June 2022 and September 2022 to quarters. In June 2022 quarter, in the total income is 4,526. In September quarter it is reduced to 4,043. So in this quarter ACC didn't do well in selling the products, so their revenue is reduced somewhat from 4,526 crores to 4,043 crores. Likewise, in the total expense in June it is 4,2022 and in September it is 4,162. So it is also reduced, but we have to see the rate of change of this declining. in another one application that is called comparison application. In another one video we will go through that comparison. The net profit is becomes negative in the last quarter. The reason is the total income has been reduced, so it is minus 87 crores, and the revenue by quarter, that is also reduced in 2020 in the September 2022 compared to the June 2022. So June 2022 it is 4,468, but in September it is 3,987. This kind of trend is also shown in expenses, net income versus revenue. Everything is in negative for the last quarter. So what we infer is the ACC is not doing well in the last quarter. They have to go through to find out what is the reason for reducing the revenue and reducing the net profit. The next analysis we will do is the ratios. These ratios are given by the company. It is also coming with the financial statements. The first one is the debtor days. The debtor days is the days that is taken, the average days that is taken to collect the money from the customers, that is to collect the money from the account receivable. It shows that in 2021 it is 11 days. It is really good. Actually, the ACC management is capable of collecting the money quickly, and they can also have a good stringent policy in getting the money into the company by collecting the money from the customers. The next one is the inventory days. The inventory days is the average days the material will be kept in the company to sell the product. So it is a very important parameter. In 2021 the inventory days is 162. It is increased from the previous year 2020, but when compared to the initial years it is reduced. So the to keep the inventory days in a least will be very important for the company, so that they can get more cash from the operations, or they can easily sell the product. So now it is at the 162 days. The next parameter we are going to see is the days payable. The days payable is the average days the company has to pay its bills to its suppliers. It seems that it has got 243 days average days in 2021. That seems that the company is capable of negotiated with its suppliers to have enough time to pay its bills. It also increases the cash flow from the operations. However, they have to be very keen on getting any dissatisfaction of the suppliers because of these longer days. But however, the ACC management has got a good control in paying their bills, or good negotiation with the suppliers to paying their bills. The next one is the cash conversion cycle. It is how long the average days the inventory and other resources will become the revenue. It is the formula is used is the DPO plus DAO minus DPO. It is DBO plus DAO minus DPO. It is in the negative forms because the days payable is too high. That has made the CCC in negative forms. Usually the having a low CCC in consistent form is good for the company. And next one is the working capital days per year. It is the working days, the working capital by revenue into 365 by revenue. The working capital is the current assets minus current liability. Because the working capital shows here the negative, if we have more details on current assets and current liabilities, then only we can analyze the working capital parameter, working capital days per year parameter. So we need additional details about current assets and the current liability. But usually having this metrics as low as possible is the good for the company. That is, the working capital days should be very less for better performance of the company. The next parameter is ROCE percentage per year. It is return on capital employed. It is around 19% in 2021, really a good one, and it is increased from the previous year 2020. So it is also a very good reflection, that is ROCE per year. The next statement we are going to see is the shareholder pattern. The shareholder pattern year by year. In DAIs, the shareholding has been maintained at 19 percentage. So the DAA is it is in September 2022 it is 19 percentage. However, in June 2022 it is 21 percentage. So the DAS has been reduced by 2 percentage in the last quarter, and the same is happened in the FIAs also. In June 2022 it is 12 percentage. In September 2022 quarter it is 11 percentage. That means 1 percentage has been reduced. So from which what we see is in the last quarter the FIAs investment as well as DAIs investments both have been reduced from the previous quarter. And when compared to the promoters share, it is increased. Last quarter it is increased by 2%. Here it is approximately 2%, but the actual value is 2.15%. So promoters have bought some shares from the market that seems in this chart. It is good because the promoter has confidence on the performance of the company and its management. But at the same time, we should also consider few concerns because it is concentrating in one place. So it may lead to some kind of issues. So it has positive and negative values. That is, the promoter is having good confidence on its company, as well as there is some issue if the shares are concentrating in one place. The public share by year is 13% in the last quarter. It is somewhat maintained. In June 2022 it was also 13%. Now it is also 13%. So the same kind of share is held by public for the last quarter. Thank you for watching the video. I hope you can enjoy this video and you know how to do the fundamental analysis with the help of this kind of bar chart. I welcome your comments. Thank you once again.